Hello investors, welcome back to Stocker Team. We have talked about growth stocks and their potential to grow your portfolio exponentially over a medium to long-term horizon. From Apple to Microsoft, Nvidia to Apple. These growth stocks have rewarded investors bountifully. However, one growth stock we haven't touched is Tesla. In this 3-part episode, we'll explore the challenges, the bright spots, and what the future holds for one of the world's most valuable electric car companies, Tesla. With the ticker symbol TSLA, many critics of Tesla have argued that the company is just another car company. To some, Tesla is a successful and innovative electric vehicle company. The most optimistic admirers and shareholders of Tesla see it as an artificial intelligence and robotics giant, and in the words of Elon Musk, solve autonomy. Still, Tesla's pioneering force in the electric vehicle and clean energy sector is undeniable. Simply put, Tesla is a behemoth. Boasting a current market cap of over $760 billion, Tesla kings the EV industry with its innovative battery technology, autonomous driving technology, extensive supercharger network, battery supply chain mastery, and unique marketing strategies. Since its initial public offering in 2010, Tesla's stock has surged over 4,000%, marking one of the most impressive growth trajectories in the stock market over the last decade and a half. Tesla's initial market cap of approximately $2.23 billion in 2010 has blown massively to close to $800 billion, reflecting an increase of over 31,200% over the years and translating to a compound annual growth rate of around 49.42%. However, in recent times, Tesla has been battling a myriad of problems that have eaten up its market share. From Elon Musk's distracted leadership, internal operational struggles, external pressures from competitors, changing business and regulatory landscapes in foreign markets, and declining sales, Tesla is plagued with challenges. In 2023, Tesla's market share in electric vehicles decreased to 55%, down from 62% the previous year, as competition intensified across the automotive industry. Tesla's woes have also not been helped by the forces of rising interest rates and biting inflation that has dented the EV market. As opposed to the tech sector's norm of slapping down companies with suffering businesses, Tesla typically enjoys a considerable runway from investors. Wall Street is notorious for harshly correcting moonshot businesses with faulty businesses, with Mark Zuckerberg's Meta platforms and Fisker being notable cases in point. Tesla has always found the phenomenon of Elon Musk a bankable leeway. In its latest earnings report, Tesla tickled investors with its automotive revenue of $20.02 billion, a full 79% of the total, as auto services accounted for 11% and energy generation and storage about 9%. While the flash of profitability spurred investors, Musk predicted that deliveries would rise this year and growth would be something like 20% to 30% next year, sending Tesla's stock soaring 22%, marking the biggest single-day gain since May 2013. Musk's prediction has also sent Tesla shares back into the green for the year after a bumpy journey so far. Before its latest earnings report, the bears had been feasting on Tesla stock, especially in the wake of the company's disappointing robotaxi event, which saw Tesla's stock slump by 11% and left devoted Tesla bulls like Adam Jonas of Morgan Stanley unimpressed at the lack of specific details for the company's robotaxis and cyber vans. Investors also raised eyebrows at the demo robots unveiled at the event that were reportedly remote-controlled rather than governed by AI. While the cult of Elon Musk and Tesla will continue to overlook the supposed distractions of his ex-ownership, non-stop posting on X, the company's declining sales, Google's Waymo trumping Tesla's dreams of autonomous driving, BYD eating up Tesla's market share in China, and the plagues of inflation and rising interest rates, these factors raise questions about the future of Tesla's stock going forward. We know you want us to do more good content that will enrich your knowledge and investment portfolio. Please click the subscribe button if you have not subscribed to our channel, and put on the notification bell so you do not miss any of our content and episodes. You are watching Stockerton, the investors channel. The enigma of Elon Musk is central to the success story of Tesla. Musk is famed for groundbreaking and boundary-pushing innovations across multiple sectors, including aerospace, automotive, energy, and neurotechnology. Elon Musk has revolutionized space exploration with now aerospace technology leader SpaceX, introducing reusable rockets with a dream to reduce the cost of space travel and eventually colonize Mars. Musk is also finding success transforming satellite internet service with Starlink, bridging humans and technology, enhancing human capabilities, addressing neurological conditions with Neuralink's brain-computer interface (BCI) technology, and alleviating urban congestion through the innovative tunneling technologies of the Boring Company. Musk also co-founded OpenAI in 2015 with the mission of promoting safe artificial intelligence. While Musk is no longer directly involved with OpenAI, he later launched xAI in 2023, focusing on generative AI technologies. Elon's xAI seeks to create advanced AI systems while addressing potential ethical concerns surrounding AI deployments. With Tesla, Musk has transformed the automotive industry with his focus on electric vehicles and sustainable energy solutions. Tesla's full self-driving system is arguably the most significant leap towards autonomous vehicles. With Tesla, Musk has also challenged traditional automotive giants by achieving a market capitalization that rivals or even trumps established manufacturers. Boasting a divisive public persona, Elon's behavior and antics have increasingly drawn scrutiny and backlash, rubbing off negatively on the Tesla stock. Musk's polarizing actions are also strongly correlated with surveys indicating that consumer interest in Tesla has significantly declined, with the company's consideration score dropping from 70% in late 2021 to just 31% in early 2024. Musk's frequent political commentary and erratic behavior have alienated some segments of Tesla's investor base, particularly those who may now consider alternatives from competitors that do not carry similar baggage. Plus, Musk's focus appears divided as he engages with other ventures like SpaceX and his social media platform, X, formerly Twitter, leading to fears that Tesla is being deprived of quality attention at a time when its competitors are waxing stronger. Musk also has a dense track record of failed promises and unmet benchmarks for Tesla. One of Musk's most notable promises has been the development of fully autonomous vehicles. Since 2017, he has repeatedly claimed that Tesla would achieve full self-driving capabilities. In 2019, Musk projected that a fleet of 1 million autonomous robotaxis would be operational real soon now. Fast forward to 2024, and while Tesla has introduced prototypes of the Cybercab, Cybertruck, and robotaxis, many bear-side analysts, critics, and experts in the industry remain skeptical about its viability and timeline for mass production. Musk recently announced plans to begin production by 2026, but this has done little to alleviate concerns about Tesla's ability to deliver on its promises. Elon's ambitious production goals have often led to what he termed production hell. For instance, During the rollout of the Model 3 in 2017, he promised to deliver 200,000 vehicles in the later half of that year. The reality was starkly different. Production bottlenecks resulted in far fewer deliveries than anticipated. This trend continued with other models, including the Cybertruck, which has faced several misses in production targets since its commercial launch. Also, Musk has long touted plans for an affordable electric vehicle priced around $25,000. However, reports indicate that this initiative may have been shelved due to production challenges and cost constraints. The failure to meet production and technological benchmarks has had significant financial repercussions. Following a recent event showcasing Tesla's robotaxi prototypes, company's stock plummeted by over 9%. Analysts pointed out that the event lacked concrete details about production timelines and feasibility, leading to investor skepticism. However, after its recent third quarter results, Tesla's stock jumped by more than 20%, giving its analyst-beating result on the top and bottom line. A few days later, the stock lost almost half of the recent gains after a broad market pullback. Moreover, the coast is not anywhere clear for Tesla, as the coming years are expected to be the most challenging in its entire history. But with the election of Donald Trump as the next president of the US, an election Musk himself campaigned for, the company's stock has surged astronomically, gaining over 40%, and its market cap hitting $1 trillion, a valuation that has once again made Tesla one of the most watched companies in 2024. We are committed to creating content that boosts your investment knowledge and helps you grow your portfolio. If you haven't yet, click that subscribe button and turn on the notification bell so you are always in the loop with our latest episodes and updates. You are watching Stockotim, the investors channel. Tesla is seeing its competitors steadily chip away at its global market share, and major amongst these competitors is the Warren Buffett-backed Chinese EV maker, BYD. BYD has rapidly increased its market share in the global EV sector, closing the gap with Tesla. As of early 2024, BYD's share in the battery electric vehicle (BEV) market was around 17%, just slightly behind Tesla's. This competitive pressure is exacerbated by BYD's focus on affordability and a broader consumer base. BYD outperformed Tesla in year-to-date returns and has shown lower volatility. Its total revenue for the trailing 12 months reached approximately $465 billion, significantly higher than Tesla's $95 billion, a financial advantage that allows BYD to invest heavily in R&D and marketing. Plus, BYD's innovations in battery technology, particularly lithium iron phosphate batteries, provides cost advantages and longer lifespans compared to Tesla's offerings. This technological edge enables BYD to offer competitive pricing while maintaining profitability. Legacy automakers are also catching up. Ford and General Motors are ramping up their EV production capabilities. Ford's F-150 Lightning and GM's Chevrolet Bolt have gained traction in the market, offering consumers viable alternatives to Tesla's models. These vehicles are often priced lower than Tesla's offerings, appealing to budget-conscious buyers. Ford has also entered strategic partnerships to enhance its EV technology and supply chain resilience. This includes collaboration for battery production that could potentially lower costs and improve delivery timelines. With established brand loyalty and extensive dealership networks, Ford and GM are well positioned to capture significant market shares as consumer interests in EVs grow. Volkswagen has also made aggressive commitments to electrification, with models like the ID.4 aiming to capture a share of the growing EV market. Their global reach and extensive dealership networks provide them with an advantage in marketing and distribution, directly challenging Tesla's sales. New entrants into the EV market are also making huge resounding statements. NIO and XPeng represent the growing competition from Chinese startups that are innovating rapidly in the EV space. They offer advanced technological features, competitive pricing, and are increasingly gaining traction both domestically and internationally. Their ability to adapt quickly to consumer preferences poses a challenge for Tesla, which has been criticized for not refreshing its product lineup quickly enough. Companies like Rivian are also challenging Tesla by targeting niche markets with innovative features and unique selling propositions. These startups are adopting aggressive pricing strategies to attract customers away from established players like Tesla. This trend places additional pressure on Tesla to adjust its pricing models without sacrificing profit margins. These competitive dynamics have impacted Tesla's financial performance. Tesla's delivery numbers have seen a troubling decline. In the first quarter of 2024, the company reported delivering just under 387,000 vehicles, marking an 8% drop year-over-year and the lowest quarterly figure since 2022. This decline was exacerbated by a 20% drop in deliveries compared to the previous quarter. A decline analysts have described this situation as an unmitigated disaster, pointing to sluggish consumer demand and a price war with competitors like BYD, which recently surpassed Tesla in sales for battery-only vehicles in China. Despite aggressive price cuts aimed at boosting demand, Tesla's sales have not rebounded as expected. The company's automotive gross margin has plummeted from 27.9% to 16.3% over the past year, reflecting the financial strain of these price reductions. In the next part, we will continue to dive deeper into the dynamics of Tesla's competitive headwinds, as well as the prospects of the stock and what investors should look out for. Support us today by subscribing, put on the notification bell so you don't miss any of our future episodes. From Wall Street to the Main Street and across the global financial markets, you are watching Stock Team, the investors channel.